I don't think there's any resistance right now between here and 50, and I don't think 50 is resistance. It's a phantom set of highs that are so old and so long ago that if anybody wants to try to sell against the $50 highs, I bet it doesn't work. And if it works for 2 days, it won't work any longer than that. I think we're going to blow that stuff out and get it far enough beyond it to where people have to then sit down and say, golly, I missed it.
In today's news recap, Morgan Stanley raised its gold price forecast for the fourth quarter to $3,800, favoring gold, silver, and copper futures. Morgan Stanley published a report on the metal industry stating that a further weakening of the U.S. dollar should provide a tailwind for commodities. An increase in U.S. inflation could also attract inflows, and any stimulus policies from China would be an unexpected bullish factor for the industry. However, U.S. tariffs pose growth risks as the effect of stockpiling gradually fades. The bank prefers gold, silver, and COMEX copper futures. The bank expects tariffs on certain countries to be raised again starting August 1st, and tariffs on industries such as steel, aluminum, and copper may also affect and push up cost inflation in the industrial sector. Exports continue to support Chinese metal demand, but this support may weaken as tariff suspensions end. Morgan Stanley believes that the trends in the metal market this year will continue, with upside potential for COMEX copper, gold, and silver. But platinum is expected to stabilize after a roughly 50% rise. The bank has raised its fourth quarter target price for gold to $3,800 per ounce, supported by central bank and investment demand, driven by a weaker dollar, ETF bid, and ongoing uncertainty, while jewelry demand may recover as consumers adapt to higher prices. The bank forecasts gold prices at $3,500 per ounce in the third quarter of 2025, $3,800 per ounce in the fourth quarter of 2025, and $3,500 per ounce in the first quarter of 2026, with an estimated average of $3,313 per ounce. $2,625 per ounce and $2,500 per ounce for the full years of 2026, 2027, and 2028, respectively. However, Morgan Stanley also points out that there are many uncertainties in the industry. Key issues include the path of U.S. tariffs on specific countries and metals, the outcome of the U.S. Section 232 investigation into critical minerals, and whether China will introduce more stimulus measures. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
I think we're in acceleration phase now in silver. In other words, the bull trend has been going on since the lows in 2015 for gold miners, and silver. Silver and the miners have been somewhat irregular participants in that ongoing monetary metal bull trend. But I'm going to suggest to your viewers that they punch up a chart on their quote screen. Just not momentum, what we look at, which usually tells us ahead of time. So look at a simple, stupid weekly price chart and go back 10 years, and draw a line across, go back to 2022 anyway. Remember 2022, that's when silver had a plunge and gold had a plunge. Gold dropped from over 2,000 and dropped down to the low 1600s. It's a 20% correction, actually, for the only one it had in the whole bull trend. And silver had a nasty pullback. It got down into the $17 level, I think. Plot that weekly price chart. And when you punch it up, draw a line across the highs of the last several years, so 22, 23, 24, and into this year. And you'll find you can connect a whole bunch of peak weekly price closes. And there's an uptrending line across those highs, meaning it defines the ascent of silver. And it's hit that line 1, 2, 3, 4, 5 times over the last several years, where it hits that line of ascent and bumps its head. And then you get a pullback. Nevertheless, it continues up. That line of ascent pretty much defines what's going on in silver. It's going up every year. Okay. Yeah, there are pullbacks, there's pauses, et cetera, et cetera. Well, our momentum work in early June, so 5 weeks ago, let's say, told us we're going to accelerate now. In other words, we're not going to follow some prior line of ascent that everybody's used to. Price just joined in last week, and if you plot that line, you'll see that last week's action punched through it. In other words, if that line was a ceiling, an ascending ceiling of resistance, even price now says, I'm out of here. Okay, you blew through it definitively. And, and pullback this week isn't even threatening that. In other words, we've accelerated the market. And I think what's about to happen over the next 5 or so months is likely to be the kind of strength that people aren't used to. And therefore, they'll probably doubt it, all the way up, like, oh, this can't be, I think we're headed into a period of ascent for silver that is far more demonstrable, far stronger than gold on a percent gain basis. Same is true with the gold and the silver miners. They have now, when we measure their spread relation to gold, or we measure silver's spread relation to gold, we're getting breakouts saying, hey, we were sleepy for a while. Now we're going to beat you, Mama Gold. And I think you should put your seatbelt on, because I think the next 5 months or so will be quite interesting.
In today's news recap, gold prices at $4,000. Why more analysts believe in that target. It took nearly 2 years for the price of gold to climb from $2,000 to $3,000 an ounce. The timeline from $3,000 to $4,000 could be half that long, arriving about a year from now, some analysts say. Goldman Sachs, GS, JPMorgan, JPM, and other Wall Street analysts are forecasting gold prices will reach the $4,000 milestone by the middle of 2026. That would be just 15 months after gold hit $3,000 in March. Gold first closed above the $2,000 level in April 2023, according to FactSet data. Natasha Kaneva, head of global commodities strategy at JPMorgan, said the chance of a recession and global trade risks make the $4,000 target all the more possible. We remain deeply convinced of a continued structural bull case for gold and raise our price targets accordingly, Kaneva said. JPMorgan Research expects gold to average $3,675 an ounce in the fourth quarter of this year, rising to $4,000 in the third quarter of 2026. Previously, the firm didn't expect gold to touch $4,000 at all next year. Monday, COMEX gold for July delivery closed at $3,332.20 an ounce, up 26.7% year to date, according to Dow Jones market data. SPDR Gold Shares, GLD, an ETF that tracks the price of bullion, has been forming a flat base over the past 11 weeks. The potential buy point is 317.63. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
People doubt that because they're so accustomed to what they've been taught by silver itself. Its behavior pattern it's been embedded in investors' minds. Well, this happens to many markets. whether they're in a bear trend or a bull trend. They may suddenly at some point in the trend say, hey, enough of this. I'm going to move more quickly, whether up or down, in this case up. And I think we're going to be probably in the $60 to $70 zone in the next 5 months or so. Okay. Now, and that's not the end of it. I don't think we're going to end the bull market in gold and silver like we have in prior peaks, like in 1980 or 2011. I don't think that's what's coming. I think what's coming is so many institutions, assumptions, and markets will be turned asunder that we're going to end up with monetary metals being money yet again. And I think it's going to pop up here, 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 this country, that country. And already in the United States, there have been several states that have not just not taxed gold and silver transactions, but have made them legal tender. Florida has done it. Texas has just done it, where they're in effect telling the central bank of the government, you don't have monopoly control over money anymore. We just legalize gold and silver as legal tender. You can pay your taxes with it. So in other words, they're in effect seceding from the national monopoly control over the money unit, which is of course an unbacked piece of paper. They're replacing it with, that kind of process is underway in its infancy, and it's going to grow more rapidly, especially as we see an economic downturn, which I think we're going to see, and the stock market trap people. I think it's been topping actually for a couple of years, where it'll make a gain, have a sharp pullback, and make another gain, but it isn't sustained, and another drop, et cetera. I think there's distribution going on, and I think the market is topping. And when it tops and goes down, that's when you see the data points go awry, to the point where the central bank pulls their hair out and the central government does the same, and they have to go to monetary excess, which we know our current president is all in favor of. He's told them, get rates down to 1%, whatever. That is going to further pave the upside for the monetary metals.
What do you think of Michael's take? Are we going to experience an accelerated phase in this silver's bull run, or is he clueless and this is most likely a local top? Are the next 50 days crucial to get to $50 silver, or will everything be just fine? Post in the comments section down below and share this video with a stacker. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.